Hello, my name is Thanh Chuan. I am a realtor and mortgage loan officer. In many years, since business since 1997, I have helped a lot of people to sell and buy home, mobile home, land, commercial property and business opportunity, purchase finance and refinance. My selling fee is only 1% for listing agent, plus 2% fee for buyer agent. Total fee are 3%. If I represent seller and buyer at dual agent, total fee is only 1%. Listing fee include full service of advertising on MLS, Internet, and open house. When you buy a home, you will receive 1/3% of my commission. If you buy a new home from builders, you will receive 1/2% of my commission. Home finance and refinance with no point no cost. Commercial loan, conventional loan, FHA loan, VA loan, and non-qualified loan programs. I am working with most major lenders to get the best loan program and best interest rate for you. For the best client interest, ethical values are very important to me in real estate and mortgage business. I am working with On Time Realty and Mortgage Corporation. If you have any needs or any questions in real estate and mortgage, feel free to call me, Thanh Chuan, at 408-921-9628, 408-921-9628, 408-921-9628. My weekly program on YouTube and Facebook is Bay Area Real Estate and Mortgage. The program will share a lot of important information and news in real estate and mortgage to help you understand more about real estate and mortgage markets, especially in the Bay Area, consistently ranked among the most expensive real estate market in the world. Bay Area is one of the most densely populated cities in the U.S. The Bay Area housing market consists of all 9 counties: Alameda, Contra Costa, Marin, Napa, San Francisco, San Mateo, Santa Clara, Solano, and Sonoma. Bay Area also includes 101 municipalities. The region is home of 3 major cities: San Francisco, Oakland, and the largest city is San Jose. Here are the news and information for this week's housing market in U.S., Bay Area, and most counties around the Bay. Mortgage interest rate for Friday, March 3, 2023. For primary resident, loan to value less than 60%, good score more than 740. Conforming loan amount $726,200, 30-year fixed, 6.37% APR, no point of cost. 15-year fixed, 5.95% APR, no point of cost. High balance loan amount $1,089,300, 30-year fixed, 6.625% APR, no point of cost. 15-year fixed, 6.37% APR, no point of cost. Interest rate is for information purpose only. Interest rate is changing few times a day. Interest rate is not guaranteed until it is locked. For more information about rate quote, please call me, Thanh Chuan, 408-921-9628, 408-921-9628, license DA 01227390, NMLS 344912. On Time Realty and Mortgage, license DIV 0951776, and MLS 1187177. This week's number of house for real estate market in Bay Area and around the Bay. New listing 2,207, need price increase 156, need price decrease 719, transaction fell through 141. Listing back on market 112, contingency 360, pending sale 1,888, change to sold 4,216. Listing expire 1,173. Listing cancel 436. Average home price in Bay Area for January of 2023 compared to January of 2022. Alameda County average home price $1,065,000, fell 14.8%. Contra Costa County average home price $736,500, fell 11.2%. Marin County average home price $1,200,000, fell 18.1%. Napa County average home price $790,000, fell 8.4%. San Francisco County average home price $1,385,000, fell 15%. San Mateo County average home price $1,625,000, fell 18.8%. Santa Clara County average home price $1,530,000, fell 10.8%. Solano average home price $580,000, fell 0.6%. Sonoma average home price $781,930, fell 2.1%. Mortgage application were down 5.7% in the week ended February 24, 2023, marking a third consecutive decline and pushing the mortgage application close to 28-year low. Application to refinance a home were down 5.5%, and those to purchase a home loan fell 5.6%. Meanwhile, the average contract interest rate for 30-year fixed-rate mortgage with conforming loan balance $726,200 or less went up 9 basis points to 6.71%, a fresh high since mid-November and tracking a rise in Treasury yield. Data on inflation, employment, and economic activity was signal that inflation may not be cooling as quickly as anticipated, which continue to push upward pressure on rates. Refinance applications account for less than a third for all applications and remain more than 70% behind last year's pace. Pending home sales in U.S. unexpectedly surged 8.1% month-over-month in January of 2023, following a downwardly revised 1.1% rise in December and beating market forecasts of a 1% gain. It is the biggest hike since June 2020, with contract signing increase in all four major U.S. regions as buyers responded to better affordability from falling mortgage rates in December and January. Year-on-year, however, sales were down 24.1%. Home sale activity looked to be bottoming out in the first quarter of this year, before incremental improvement will occur. But an annual gain in home sale will not occur until 2024. Meanwhile, home price will be steady in most parts of the country with a minor change in national median home price. Home price index Case-Shiller in United States decreased 0.9% month-over-month in December 2022, marking a sixth consecutive month of decline in home price, but rose 4.6% year-on-year in December 2022 to December 2023, below a 6.8% increase November and forecast of 5.8%. Home price slowed for a 8th straight month to low annual growth since July of 2020. House price slow in all 20 cities, which declined in San Francisco minus 4.2%, Seattle minus 1.8%, while the biggest rise was seen in Miami 15.9%, in Tampa 13.9%, in Atlanta gained 10.4%. The prospect of stable or higher interest rates mean that mortgage financing remains a headwind for home price, while economic weakness, including the possibility of a recession, may also constrain potential buyers, given the prospect for a challenging macroeconomic environment. Home price may well continue to weaken. Another news from the Fed. Dallas Federal Reserve economists warned in a Tuesday research report U.S. housing faced a potential 19.5% correction, and more rate hikes from central banks could make a crash even worse. The global housing market had become frosty since 2020 as a result of pandemic boom, and there's still a risk of a deep housing slide despite signs of easing home price growth. The Fed's aggressive rate hiking cycle has pushed mortgage rates higher over last year, hitting around 7% in October. Earlier this month, mortgage rates fell back near 6%, but are heading back up again near 7% recently. The U.S. housing slump will dampen as interest rates keep rising. Still, the housing market may be healing, and consumers need not fear the U.S. housing slump looks set to dampen this year as the steepest surge in borrowing costs since the 1980s continue to deter buyers. Home value in the world's largest economy could fall by as much as 5% in second quarter. According to Tech Power real estate brokerage Redfin, price will likely slightly fall throughout 2023. A 2008 style housing crash is unlikely this year, according to economists from both the firms. That's because a majority of U.S. homeowners are locked into low interest rate and don't face any pressure to sell, meaning the market may not see many distressed sales. Also, unlike the current situation, the 2008 housing crash happened against the backdrop of a broader credit market crunch. Thank you for listening to my program. Wishing you full of blessing and happiness.